What if I was to tell you that with the conditions that we're currently seeing in the market, only 22% of the time the market will be bullish over the next week? Yes, you would probably find that incredibly surprising considering how bullish the market has been. But we've seen some interesting signs coming through the Friday and the last 2 days of trade that really have us thinking this could be finally a little bit of a sell-off. It's called the June Swoon, and we're going to talk about it right now in our special weekend edition discussing stocks, commodities, and cryptos. Let's take a look. Well, welcome back everybody to the Daily Show where we talk about markets around the world. Of course, we'll be covering the latest macro lead indicators and the hottest charts. And if it's your first time here, welcome to the community. Subscribe, smash that like button. We've got a lot to cover. So the last week was still positive for all of the big tech stocks. But at the start of this video, I talked about the stat of 22% of the time markets will be bullish. Well, it turns out the Friday session and even on the Thursday session, we've finally seen 2 days of a rotation that we haven't had in a very long time. And this comes off the back of some other very interesting statistics. Let's talk about bull case scenarios though, first and foremost. If you are a bull, then you like AI. And of course, why? Well, it's probably slated to mean that a lot of companies are going to be able to fire a whole bunch of employees over the next couple of years, replace them with robots, and get more efficient. And of course, Goldman Sachs here in their latest report says that they believe it's going to increase the stock market overall. Goldman have completely switched. If you would have seen some of their calls last year, they had 3,600 being their fare. Then they went to 4K. Now they're sitting at about 4,500 by the end of 2023. But there's a lot of work to be done in between now and then. One of the interesting or more scary stats that I guess is coming out at the moment is, of course, the S&P 500 ratio to bonds ratio. Now, there have been some peaking periods here where the bonds market versus the S&P 500 have become a little bit too high. And that's led into some kind of worrying things that go on the markets. You can see some of the measurements here. 29, everyone likes bringing up that. 87, that's a flash crash. 2000, 2007, the ones that most people are correlating the current market with. So with the stock to bond ratio becoming a little bit more extreme, does that mean we should be careful in these markets? Well, in some ways, yes. And I do think that at least mean reversion is coming relatively soon for markets around us. So let's bring in some of the data. The first one is June OPEX. Positive week last week. Last 2 years were negative. Overall stats generally positive. Market ended positive. So theoretically, it's meeting all of its standard statistics over time. This week, however, changes the game. Only 10 times up, 20 times down. And that's an interesting stat by itself. But we can actually dive into that a little bit more here. And you can see what we call the June Swoon. Now, the June Swoon is between a period of June 19th and June 27th, which obviously we're coming up to. And only 4 of the last 22 times has the market been actually up. This is a very poor stat for a market that is generally bullish. Now, of course, this is when it's preceded by a positive quarter. We've had that. This is the last 30 years of data. Obviously, that's good. And you can see that whatever negativity gets knocked off here theoretically is put on and then some the week after. So are we going into a period of weakness in markets? Well, you would have to say it looks like at least we have a week here to maybe see a bit of a flash sell after what was almost all of the options expired. I think it was like 40 or 50% of the gamma expired on the Friday. $2.2 trillion in just some of the major options. It was quadruple witching. There was a lot at stake and they are now gone. It also allows the VIX to actually spike up potentially this week. So if it's going to happen, this is probably one of the weeks that bears really should gain control. We've seen some signs of that in the stock market. We'll talk about it later on, specifically from the Qs themselves. But of course, at the moment, there are no swing trends down. What about June market performance over a 20-year period when we're talking about pre-election periods? Bit different, but often a weakness. This is trading days. Often somewhere between this week, we tend to see that sell-off period followed by strength. Interesting. Will it happen again? Again, 22% is an interesting stat in itself. For bears, you're probably looking at this market saying, how is this possible? Here's the price to sales ratio of the mega cap FANG Plus stocks, and you can see all of them written up here. Now, I don't really like to use price to sales ratio. I think you should use forward PS ratios or, of course, forward PE ratios. But you can really see the expectations have gone ballistic for Nvidia here. And it kind of reminds me a little bit of Tesla back in the day, where you've got to now meet those expectations. Now, of course, Tesla did for a very long time, but at the moment, Nvidia is now on the earnings calls. You know, it is everything to what Nvidia's stock price is going to be doing next. Let's move over to what else we've been seeing in the unusual options market activity. Some of the most amount of calls ever recorded, of course, have come through over the last couple of weeks. This particular call was a monster last week. We saw some smashing transactions, and of course, it outpaces everything that we've seen at least over the last 6 months. If we go here, $700 billion is from Goldman Sachs. Calls were opened over the period of time here, one of the largest on record, if not the all-time record, and it was an extreme level of greed coming through markets. Now, we know that when extreme greed comes in, usually we go around 1 to 2 weeks, then we see a sell-off. We've now entered 1 week of that, and of course it was green again. Will the second week bring the bears? I've kind of said this a few times now. About 2 weeks ago, I said that we would start this. We'd probably go to 1 to 2 weeks, and this is week 2 of it. Now we'll find out whether the bears actually can gain control, because if it's going to happen, this should be the one. Let's move over here to the PCC, and you can see here put call ratio getting out of control again. This will be much higher. This was taken about a week and a half ago. So, of course, since then, calls have absolutely skyrocketed. And this really shows you that when tech calls skyrocket, you need to be more cautious in markets. Can you ride the trend? Absolutely, you can. But then you need to be able to figure out when you're going to potentially dump or maybe reduce your positions. And I would argue that we've hit some key levels on the Qs right now. This is the dot plot we got given. It tells us that the Federal Reserve and the market don't agree at all. The Fed basically is saying we're going to hold rates higher for longer. And the stock market's saying, that's not going to happen, guys. Come on now. We know that you're going to cut rates in 2024 hard and that you're going to try to support the economy. They do not believe that 2 rate hikes are coming. That will scare the market should it eventuate. At this stage, of course, it has not. Let's go to forward PE ratios. As an investor on the channel, do you like the market right now? I would say it's about 18.6 at the time of this recording. Is it cheap? No. Is it expensive? Not really. It's been much higher. As you can see here, 2021 in particular was an incredibly expensive time to own the market. We've seen what happens after those periods if you are patient enough. Now, 25-year average is 16.8. I tend to like buying around the 16s, 15.5s. You will get opportunities like that many, many times over a period of 10 years. So, if you do hold back, if you have that patience as an investor, it can pay off. That's very difficult, though. Patience is the hardest thing. Now, I've seen this argument going a lot around M2 and CPI annual average change. And I think people are drawing the conclusions here based on, of course, M2 declines being some of the highest since the Great Depression. And you can see here the M2 decline, you can see the CPI overall. And then, of course, you also have this massive movement in the 20s. Now, we know the 20s went ballistic first, but the first actual one, 1920 to 21, we had a little depression in there, which was a very similar time. We saw CPI going hot, then going super cool off a cliff, and at the same time, M2 money supply dumped. Then we went into one of the best periods ever in the market. And then, of course, it all went bad. We got a Great Depression. Bad things happened. So, a lot of people are drawing that conclusion. Probably too early to tell whether that is in. At the moment, the markets obviously are showing bullishness rather than bearishness out there. Let's move over now to sentiment. Now, I have not seen this in years, and I mean years. 2 incredibly green, big reads here. Neutrality, all the bears are gone. They are out of the market. They have been scared off. It does lead into that 22% stat. Let's face it, 2 weeks. This is part of the reason why we were willing to make such discussions actually, go out there on the YouTubes, because when you start stacking some of the evidence we'll put together in a moment, if we get the right triggers, you've got to think at least some form of sell is coming. Let's look at fear and greed. Extreme greed, 82 read. Everybody knows that. Yeah, is that something we should be worried about? I would say in general times, it is a time to be cautious in markets as per everything. Go to single stocks, go to sectors, look at rotation and target the things that are really running. Now, some of the ones that have been running recently have, of course, been Adobe, which many of you have been on, which is a pretty amazing stock at the moment. It's been running pretty hard. But let's have a look at some interesting outputs. One of the ones we mentioned recently was PayPal. It's had a couple of good sessions, even though the market's been down. I wouldn't be surprised at all to see people, if we do see sell-offs, to see people bunker into PayPal. Things like Intel as well have been very strong, which we'll look at a little bit later on. Now, can you stop the juggernaut of Tesla? Well, the current relative to 90-day volumes would say probably not, 1.51. A lot of unusual options activity continuing to come through some of these stocks. You can see, again, 7.53 down here. PayPal, 1.9. Some pretty large moves. I'd say AI may be over. That stock ran very hard over the last week. And of course, I believe SoFi is in decline at the moment, getting a downgrade, plus, of course, an island reversal at the top, which we spotted here on the channel. Not a bad short there on that one at this stage. Obviously risky though, indeed. Now, let's look at the unusual options. This is where it gets a bit more interesting. Friday actually finally had puts. The 3 top ones. 1, 2, 3. Wow. This is the first time in a long time we've seen this. Yes, they were all 0 DTEs. They were massive. Look at them. Look at the size of these options. Absolutely monster options, keeping the market down a little bit there and shutting it from being call bullish again. We also saw a couple of puts coming in the queues, but I think what's most interesting is there were a few that were being run into this week and also a few that are being run a little bit longer. Notice this one down here, random put, 375 put, 28th of July. Okay, all right, we're starting to get a little bit longer date here on some of these puts. We're looking for that type of unusual initial activity followed by a whole burst of 0 DTE options. And there were quite a lot of puts coming through again. Most of the dates, though some outliers, here we've got an outlier there, some of them were coming in a little bit longer than normal, which is, possibly a good sign if you're a bear in these markets. Tesla kind of bucked that trend. I would say the first 2 calls were 260s. Obviously, one of them was dated for the next week, so Tesla may be a little bit hard to fight off here. And if we keep scrolling down, you'll notice things like SoFi was getting, a lot of puts and a lot of calls on it. Again, for the next week, that's unusual considering the stock. AMD had a lot of trade. There were a few crypto trading kind of companies coming through, and it was still mostly AMD, Nvidia, and Tesla across the majors. But I do think it's interesting to see some of these coming in, and I would say that mostly it was puts coming in on some of the smaller stocks that have had great runs recently. Let's move over now to the rotations. This is a 5-day, and on 5-day alone, you would say, well, yeah, staples did okay, healthcare and utilities have done okay, but really it's been semis and technology. The strong ones have continued to be very strong. Then we scroll over to the last 24 hours and you'll say, well, wait a second, things changed on Friday a little bit here. We had staples, we had healthcare, and we had utilities. But more importantly, they've been some of the better performers now for 2 days. Well, like basically 2 of the last 3 days. So we're starting to see a little rotation into the defensives. Probably the biggest partial rotation we've had through this bull run, I would say, for the last 150 points on the S&P. So it could be pointing towards those stats again, helping us out. So just before we jump into the charts and we take a look at all of the key levels we should be watching for this week right ahead, we want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, as most of you are aware, at the moment, Tiger Brokers are offering a special offer to our New Zealand and Australian audiences. But don't worry, if you're from other areas of the world, you can check out the special offers down below. That is extra Microsoft stock, one of the biggest moats in the market. And as we all know, Warren Buffett and Charlie Munger love a good moat when it comes to investing. Let's discuss, though, the concept of rotation, because things are starting to heat up here a little bit in the market, as we've seen over the last 2 days. Finally, some resurgence of the defensive sectors. And this leads into that 22% stat we were talking about before. Now, why can this be really helpful in Tiger Brokers? We'll take a look at the last 10 days, a totally different storyline of what's been doing well. Last 5 days, big movements through some of the markets. And of course, the last 24 hours in the market as of Friday, all of a sudden, you're looking at utilities, defensives, and other areas holding up a little bit better. This marks day 2. And of course, you need to be able to see what these stocks are doing inside of the markets. How can you do that? We can jump on over to the industry tab and then select the percentage for the day. And then you can see the ones that are doing well and the ones that are doing poorly. Clearly, all of the most hated sectors of the last couple of months were some of the best of the Friday session. And this leads into, again, an idea of maybe a beginning of rotation out of the market. If you wonder what is a good maybe metal and glass containers manufacturer stock, you've probably never considered this. You can click on it, look at all the links, look at all the stocks, investigate them further. And of course, the Tiger Brokers platform offers this as an opportunity. Check them out. The link's down in the description down below, and of course helps support the channel. So thanks so much. Now, why do we say us? Well, I think whether you're a bull or a bear, you would rather most likely have a healthy market. And what a healthy market generally does is it has 2 steps forward, 1 step back, 2 steps forward, 1 step back, the standard perfect technical kind of setup. At the moment, we do not have that. We have vertical runs by the biggest tech stocks. And we did end up getting a new higher high this week on this combo here. And this combo is, of course, made up of some of the biggest tech stocks. I'll measure it for you just so you can get an idea of how far we are away. About 16%, probably about 17.5 from the peak. If you go back through history, this is a rare percentage to be away from mean reversion. And you may notice, if you look at this chart, mean reversion always comes. Now, it always does come. You could argue, of course, it can run very far away before that happens, but it hasn't touched it any time in 2023 from this combo, which shows you a little bit too much violence, and more than likely a pullback is just around the corner based on some of the things we're seeing. NASDAQ versus IWM, NASDAQ has slowed, but Russell 2000 was still weak through the Friday trade session in comparison to the other markets. We'll check that out soon. Maybe it's showing us a bit of a sign of weakness in the back. But I think more notably was this chart. One of the charts we've been watching recently. We wanted the black swan indicator, the skew, to get crushed. It's been crushed. That's a tick. If we now get swing trade turn with the data stats, it kind of makes sense that we should see a little bit of a sell-off here. PCC also giving us a tick here. Went down. Usually 1 to 2 weeks later, we see the sell in the markets. While it makes sense that it should be coming. Again, have we got the trigger yet? Only a very small trigger, which we'll look at soon. So it's more day traders and people that are very risky that'll be willing to take these types of positions. Let's move over to copper. It rejected its supply. So again, if demand destruction, which we've been talking a lot about here on the channel, does want to play the game, this is the point where copper must weaken. I would think that copper does weaken down a little bit. Then we may find bulls, though, for it. So we've got to be very, very careful here in the copper. This is one of the most important charts over the next coming months, especially leading into Q3, which tends to be weak. So you might say, well, why is the market up so much? Well, I think a big portion of that has been central bank liquidity, central bank funds. We actually saw a slight drop-off last week. Let's go down to the daily here. Hey, finally a little drop, but still not that much. We are so extended away from the central bank liquidity. And if you believe that the Fed is running the markets at this stage, then you've got to be following charts like this. The S&P is also due for mean reversion. It's super far away from central bank liquidity. That is usually meaning a swing will eventually come in. And of course, you have to be waiting for that and then maybe looking to clip your orders. At least that's what bigger players would do. I would argue, though, that, probably for me, I would have clipped Apple a little while ago, maybe about 7% ago, actually, because it hit one of my critical resistances. So, different ways to look at it. Usually people will descale their position if they're swing trading up. That's one of the best ways to do things. Scale in, scale out. That's what a big player does. Why wouldn't you try to do that as a smaller player in the markets? We'll talk about that on the channel in the future as well. So make sure to subscribe if you like that type of stuff. Let's go over to treasuries. Treasuries floating around in the middle of nowhere. They're not getting busted as much as people think. I'm still bullish on treasuries over the medium long term, which means 3, 6 to 12 months to multiple years. I think treasuries will do fine, but I am looking for cheaper prices if possible. The US dollar will most likely trend weaker over the next coming years, but for the time being, of course, years is not, it's an easy call to make, but it's very difficult to call maybe necessarily what's going to happen over the next couple of months. Let's have a look at the evidence here. We got an actual change of trend on the smaller timeframes. The first one, since really probably around here, actually, where we couldn't hold it up and we didn't think it was going to hold anyway. Let's move down and check this out. This was an interesting bull zone that I marked, must be almost a month ago. So we've seen nice bullish trend here. If this pulls back a little bit further, I could see buyers recommitting to the dollar as it's sold off quite aggressively. And remember, if the Fed is going to do 2 rate hikes, theoretically the dollar should find a little bit of bid into that. Interesting point here for the dollar, and that couples well with gold because, of course, gold has had a very good hit on its resistance or its supply again. We know the main one is 1980. We're looking here at how gold ends up trading. Take a look at the weekly here. It went down, it took the lows, it fully rejected it. If it ends with another bullish week, maybe gold is back on the play, possible stagflation plays. I usually like gold when rates are getting actually cut more so than anything else for the bull end. Not time to explain that today, but realistically, this heavy trade zone, this is where gold must break through. At the moment, it's at what I would call resistance or supply. And if dollar does find strength in it, which it has probably a statistical play on it at the moment, then you would be looking for I guess gold to weaken at these stages. Let's move over to a couple of stocks. First up, Apple. As I mentioned before, for me, Apple actually already hit its resistance a little while ago. I thought up in these areas here presented a very good opportunity for descale by positions. Markets push you to the very brink. So, of course, what did we have? We had Apple goggles. We had new announcements. Got to say, Apple Silicon's obviously very impressive. Then we move over here, and you can see we've got a new higher high. And this is going to get a lot of people talking. More importantly, what happens? News articles get written. Everyone's bullish. Everyone's happy. The new market is fantastic. Look how great everything is. That's usually where you get mean reversion at least. Now, going back over to the weekly, you can see this is basically a vertical run here for a while. It is due for a pullback, but let's go and have a look at a couple of other markets. Apple is a canary. If you were looking usually at a turn though point for this, I think it has to make at least underneath these lows, which is around 176.81, with the first potential turn kind of showing around that 182. These lows must be stolen. I'm more on this one for a swing trend though. At this stage, it could just be 1 week of weakness, followed by, as we know, the data stats point towards bullishness. SoFi, nice downgrade. You guys got absolutely rewarded on this. I remember I was looking at it, I was thinking, oh, look how good that's been. And I didn't realize it got downgraded as well. So yeah, SoFi hitting the tenor. This was always our second target. This is a good point where you would descale your position. Potentially, if you went bullish on this, like many in the community did do, this would have been great first take profit, absolute stellar second take profit. You've managed to extract pretty well out of this market. I wouldn't be surprised at all to see SoFi continue to weaken. You can see here the weekly getting really rejected down, and in general, not that great price action. Rallies at this stage, I would like to be set by sell demand on a stock like this. Now, conversely, PayPal has been beaten into the ground, downgraded like 17,000 times. Big volume off this. You can see a nice pull up and a strong weekly close. Pretty good. I think that's pretty solid on the charts. I'd like to see PayPal get rotation into it. Do I like it as an investment? No. I think it's probably had its day. But, it's getting that rotation in and doing a little bit better. Let's move over to another one of the ones that we've found a lot of bullishness in recently. And it shows you there are different single stocks that perform well. Now, this stock was bought up. I think we really started talking about it pretty much around here, 31st of May. Since that point, it's run 22%. I already knew this was a big zone. I had it marked for a while. It just shows you there are other markets with other opportunities. And I wouldn't say that Intel is necessarily over yet. I think 38.40 is still possible, even though it's on a vertical run. I'd like to see it continue its momentum plays and ideally move into filling that gap, which you can see over here, which I think fills around 39 and a bit. What about Target? Well, it's getting under fire by everybody, but it may have based. It's actually done a V. I'm looking for it to pull back a little bit, similar to like a KRE style trade. It's pretty squeezed to the short. You can see that volume has remained consistent while it's being sold, which generally means that there are pigs. That is people that are believing in it and people that absolutely hate it. There are a whole bunch of transactions going on. I wouldn't discount the idea of my red boxes down here being hit by a stock like this, but if markets do sell, technically Target may find a little bit of bid. Speaking of market selling and finding bid, utilities actually had a pretty good Friday. It was up quite a lot in one period of time there. You can see it went up another 1.16, ended up 0.54. This has been one of my favorite sectors recently. We started talking heavily about it down here. At this stage, it's only up 4.11%. I would argue it may have actually underperformed the market, but you may have felt also safer in it because, of course, if the markets do sell off, generally utilities will hold its own or go up. Same with staples, same with, of course, healthcare. So, nice to see this. If we go to XLV here just quickly, you can see that's been a great performer as well. Arguably as a proxy if you've been a little bit scared in this market. Let's move over to Tesla, the unstoppable Tesla. Weekly closes strong. We got an after hours trade that filled the gap. Real market has not quite filled the gap yet, but maybe near enough is good enough on this one. We're damn close. Could Tesla keep going? Well, we don't have signs of weakness yet. You'll notice I marked out a level 242 where we might see a trend change. But at this stage, 300 is still possible. It's in 0DTE heaven at the moment. And we didn't see the weakness that you would expect from a stock like this through the Friday trade. Let's go to the 2-hour charts, have a look. Now that we've got a new high, you could argue 247 is where you start to maybe get like a 2-hour switch of trend and maybe start to put pressure on this market. But you've also got like trend lines behind, a very aggressive run. It is going to be hard to call a top here on this stock because 0DT is all over it. We're looking for some longer dated puts to start coming in. Speaking of market bottoms, have we seen the bottom in China? I think that China is about to get serious stim packs and continuous stim packs for multiple years. We all know what QE theoretically does to markets. I wouldn't say this market is necessarily driven by global, but what I would say is that China is probably driven by the government, and the government will continue to push through stim until they get the property market back on board. Good start, obviously coming off the lows. I'd expect a pullback here, ideally met by bull demand. We will start to cover the Chinese market because for the first time in a while, it looked kind of interesting. Now, you could argue that why did it sell off here? Well, it hit that trend line on the way down, so it's time for it to go fill some of these gaps, hopefully get a bit of a turn. Let's move over to the Qs. Took the highs. Nasty, nasty. I put this in the private community if you're interested in joining. Links in the description down below. I talked about this high level. Yeah, this is seriously on the level or the zone that I would have expected. Of course, this point as well, I was looking for a turn. Nothing there. Now we've hit these extreme highs. The S&P's in the middle at nowhere land. We've got some stats that show that market should sell. Certainly the NASDAQ is showing it. Here are some of the levels that I've got on the futures market. You can see here that we've actually had a high, low, higher, high, lower, low. For some eagle-eyed investors, you'd be looking for like a rally into a sell through this supply, about 15,200. Will that happen? Could. And of course, data would point towards that. Swing traders are probably going to need to take out these lows realistically, which is going to be a lot harder to do. So that's quite far off. If we actually take a percentage, it's maybe a little bit too much for some people. If I was guessing, it's 2.18%. Yeah. If I was guessing, I'd say this is an extremely good level, though, to see where the bears sit. And they have to really target this zone, you would think, on the markets. S&P 500. Now, this thing's hitting like a TD13. Such a rare exhaustion level. Absolutely running out of control. It's a big level. It's super exhaustion. It's super outside the Bollinger, which is very hard for it to hold. If you go back through history, you'll notice that the Bollinger, it cannot get outside of it for long. It's now sat there for 2 sessions outside the Bollinger. Rare, okay? Not impossible, but rare on an exhaustion, very far away from the 20 moving average on the daily, let alone the weekly. And if we take a look at the weekly, you might see where the weekly sits now. I've got a very important level down here, 4120. It's very possible for the markets to do something like this. And of course, if you are a bull, mean reversion is long overdue. It's overdue by probably about 5 to 7%. I might load the stats up on this channel if you're interested in subscribing and show you how actually rare it is to get this far away from the 20. It doesn't happen that often. 7%, we hit a topping here of about 8. That's leading up into the top 30 of all time, I believe. So this is a very extreme move by this market and probably overdue for a bit of a sell-off. Let's move over to the US 500. There is no resistance up here other than 4,400. It did do a gap fill, which it left behind. Obviously, we saw a little small shallow sell on the trillions of dollars of option expiration. We got a new low. 15-minute chart. A lot of you guys like that. The new low is significant. This is obviously a potential turn point. The key zone, though, is going to remain around 43.38, and that's going to potentially trigger any rallies being met by swing trade shorts. And then at that point, maybe a 41.15 is possible. Let's move over to Bitcoin. What's going on with the crypto market? Well, it found strength when everything found weakness. I thought there might be a seller in here. There was none. That's why you have patience to react, not predict. So just because you think that's a key level, it doesn't mean it's going to, even if it doesn't sell, you don't need to take a trade anyway. You're not going to predict that level. You're looking for a turn point. It's part of the preface of something like our day trading masterclass. You have to see a certain setup. If you don't see it, you have no statistical advantage. Good luck. Go to the next one. Now we've seen Bitcoin go back to one of its most traded, loved zones. Anything in here is still supply. It's still theoretically bearish. However, at this point, bears will have to be very careful about pullbacks back to around 25,600. If that does happen, there could be buyers there, and Bitcoin is precarious. I still would go with 24,200 being a point that we should get to, but I've ranted about that for a month and a half, and so far so good. But of course, there's been a lot of trades in between. That's just my longer term approach. Speaking of longer term approach, what's going on this week in the world of news? Fed Chair Powell coming out to annoy us on Thursday, June 22nd. Then we have a whole bunch of press conferences from other central banks. We've got Fed Chair Powell annoying us again on Friday. I'm sure he'll just say, we're going to use all the tools, blah, blah, blah. Inflation's still a problem, et cetera, just the copy, paste, repeat tool. But that's coming out. When he talks, the market will move, no doubt. And they're probably the two biggest events of the week, along with the other central banks out there. If you enjoyed today's video, then make sure to, of course, subscribe, smash that like button, and also check out the sponsor if you're interested, which is Tiger Brokers. Of course, there are a bunch of special offers in the links in the description down below. Thanks so much for watching. We'll see you in the next one. Bye for now.